All right, welcome to Talk Tickers. You're with us for another deep dive into the latest from the world of earnings calls. And today we're looking at, well, unpacking, I guess, Nexon's Q4 2024 earnings call.
Yeah, Nexon.
So ready to get into it?
Absolutely.
Okay, great. So, for our listeners who might not be super familiar with Nexon, they're a player in the ad tech space, right?
That's right. Yeah, they're a big player in what we call the open internet.
Open internet, okay.
Think websites, apps, streaming services, that kind of thing. Anything that's not like, the walled gardens of like Google or Facebook.
Gotcha. So kind of like the Wild West of the internet advertising.
In a way, yeah. There's definitely a lot going on, a lot of different players.
Okay, so let's jump into it. What kind of year did they have in 2024? What were some of the highlights from this most recent earnings call?
Well, I think the headline is that they finished the year really strong.
Okay.
They reported record numbers, both quarterly and for the full year, across a bunch of different areas.
Record numbers, nice.
Like their overall contribution ex-TAC, their programmatic ad revenue, their revenue from connected TV, or CTV, as you'll hear it called a lot.
Yeah.
And really importantly, their profitability also saw a big improvement.
Okay, well, you know what? Let's break those down a little bit. First, just for our listeners, this contribution ex-TAC. Could you maybe explain what exactly that means?
Sure. So contribution ex-TAC, it's basically a measure of their revenue minus certain costs that are directly related to acquiring that revenue.
Okay.
So in their case, TAC stands for traffic acquisition costs, which is basically how much they pay other companies to, get traffic to their platform.
Gotcha. So it's kind of like their core revenue after accounting for some of the essential costs of doing business.
Exactly. And it's a good way to gauge the overall health of their business.
Okay, great. So what were those record numbers you mentioned? Like what were some of the specific?
All right. So in Q4, their contribution ex-TAC reached a whopping $105.2 million. That's the highest it's ever been for them in a single quarter.
Wow.
And then their programmatic revenue, which is, a huge part of what they do, that hit $98.7 million.
Okay.
Which was a 15% increase year over year.
Yeah, no, that's a solid jump. Definitely a sign of growth.
Definitely. And they mentioned that they had a 102% retention rate for their contribution ex-TAC for the full year, which is, amazing.
So they're not just getting new customers, they're keeping the ones they have and they're spending more.
Yeah, exactly. And on top of that, their contribution ex-TAC per active customer grew by 69% to roughly $526,000.
Wow. So not only are they, retaining customers, but they're getting more revenue out of each one. And that's impressive.
It's very impressive. And it suggests they're doing something right.
Yeah, absolutely. So you also mentioned CTV, connected TV as a real bright spot for them. What's going on there?
Well, CTV is just exploding right now, and Nexon is riding that wave. More and more people are cutting the cord, dishing cable and satellite, and they're streaming all their content online.
Right. Yeah. I mean, I haven't had cable in years.
Exactly. And so advertisers, they got to go where the eyeballs are, right?
Yep.
And those eyeballs are on these streaming platforms, on these smart TVs, which is what CTV is all about.
Gotcha. So how is Nexon specifically tapping into that?
Well, their Q4 CTV revenue hit $37 million.
Okay.
And that's an 86% jump year over year.
86%. Wow. So it's clearly a big growth area for them.
Absolutely. And they think it's going to keep growing too.
Okay. So they're making money, they're growing. But what about their bottom line, their profitability? You mentioned that they saw improvement there too, right?
Oh, yeah. Their profitability really took a step up.
Okay.
In Q4, their adjusted EBITDA, which is, a key measure of profitability, was $44.3 million.
Okay.
Now that's their second highest ever, and a 38% increase from the same period last year.
Wow. Okay. So they're not just growing, they're growing profitably.
Exactly. And that resulted in a 42% margin on a contribution ex-TAC basis, which is really healthy.
Okay. That makes sense. So financially, they're killing it. But what about their balance sheet? Like how much cash do they have on hand? Do they have any debt?
Yeah. So they ended the year in a really strong financial position.
Yeah.
They had $187.1 million in cash. And importantly, no long-term debt.
No debt. Okay, that's always a good sign.
Yeah, it gives them a lot of flexibility, to invest in growth, to make acquisitions, or, to return value to shareholders, which is something they've been doing.
Yeah. How so?
They continued their share repurchase program in Q4, buying back about 4.5 million of their shares for $20.1 million. And they actually approved a new $50 million repurchase program, too.
So they're pretty confident in their future.
Seems like it, yeah. And, their non-IFRS diluted earnings per share in Q4 were 48 cents, which is up significantly from 20 cents in the same quarter last year.
All right. So wrapping up the financials here, they also, gave some guidance for 2025. What are they expecting?
Yeah. For the full year 2025, they're projecting a contribution ex-TAC of about $380 million and an adjusted EBITDA of roughly $125 million.
Okay, so basically more of the same. Continued growth, continued profitability.
That's the idea.
Yeah, so the numbers look great, but let's dig a little deeper. What's actually driving these strong results? What's behind the scenes here?
Well, management pointed to a few key things that have contributed to their success in 2024. They talked about a real focus on improving their sales execution.
Okay.
Making sure they're bringing in the right clients, closing deals effectively, that sort of thing.
Makes sense.
They also highlighted the importance of attracting and retaining top talent.
Yeah, it's always about the people.
Yeah. Absolutely. And then they also mentioned that they've really been working on simplifying their messaging, making sure that the market understands what Nexon does and what their value proposition is.
Right. So, no more jargon, just clear, concise messaging.
Exactly. And that goes hand in hand with their efforts to build their brand recognition, to really become a name that people in the industry know and trust.
Makes sense. So it sounds like they've been doing a lot internally. What about on the product and technology side?
Well, they've been busy there too. Remember that Amobi acquisition they made back in 2023?
Yeah.
Well, they've been hard at work integrating that, and they've been seeing some really good results from that, particularly in terms of, organic product and data innovation.
Okay, so the Amobi acquisition is really starting to pay off.
Yeah, it seems like they've really turned a corner there. They're seeing the benefits of that integration.
Okay. One of the things that they kept emphasizing on the call was this idea of their end-to-end platform, right?
Yeah, that's a big one for them.
Okay, so can you explain that a little bit more? Like, what does it mean and why is it so important for them?
Sure. So, in the ad tech world, there are a lot of different tools and platforms that advertisers and publishers use.
Yeah, it can be a bit of a jungle out there, right?
Oh, absolutely. And historically, it's been very fragmented.
Okay.
Advertisers might use one platform to buy ads, another to manage their data, another to track their campaigns. It can be a real mess.
Yeah, I can imagine. So what's Nexon doing differently?
Well, they've built this end-to-end platform, which basically means they offer everything an advertiser or publisher needs all in one place.
Oh, so it's like a one-stop shop for all their advertising needs.
Exactly. And their platform's been up and running since 2019.
Okay.
So they have a real head start on the competition here. A lot of other companies are just starting to try and build similar integrated models now.
Oh, wow. Okay, so Nexon's really ahead of the curve on this.
Yeah, they are. And they believe it gives them a big competitive advantage. It can lead to greater efficiency for their clients, better results, and, ultimately more revenue for Nexon.
Okay, so break it down for me a little bit more. Like what are some of the key pieces of this end-to-end platform?
All right, so, you've got their DSP and SSP. Those are kind of the core of it.
DSP and SSP, and remind me again what those stand for.
Right, so DSP is a demand-side platform, and that's what advertisers use to buy ad space across various websites and apps.
Okay.
And then SSP is a supply-side platform.
Okay.
And that's what publishers, the people who own those websites and apps with ad space, that's what they use to manage and sell their inventory to advertisers.
Okay, so Nexon basically connects those two sides of the market.
Exactly. And they do it really well. Their DSP and SSP are considered top tier, especially in the CTV space.
Okay. And why CTV specifically?
Well, as we talked about, CTV is growing like crazy, and Nexon has really focused on building out their capabilities in that area.
Okay. So they've got the DSP and SSP. What else?
Well, another key piece of the puzzle is their Nexon data platform.
Okay, Nexon data platform. What's that all about?
So it's all about data, surprise, surprise, right?
Right. Well, data is king these days, right?
Absolutely. And for an ad tech company like Nexon, Data is everything.
Okay.
So what they've done is they've created this platform that basically brings together all their data assets, from their DSP, their SSP, and other sources.
Okay.
And they use that data to power everything they do, from audience targeting to campaign optimization to product development.
Okay, so it's like this data platform is the brain of the operation.
Yeah, I think that's a good analogy.
Okay. So what kind of data are we talking about here?
Well, they have their own proprietary audience discovery technology, which basically helps them understand, who's out there, what they're interested in, how they behave online. They also have a unified ID graph, which helps them connect users across different devices.
Oh, that's important, right? Because people are using, their phones, their laptops, their tablets, their TVs, all to access the internet.
Exactly. And then they have curated media capabilities, which means they have, prepackaged audiences and ad inventory that they can offer to clients.
Okay, so they're really making it easy for advertisers to target the right people.
Yeah, and then they also have some really cool TV-focused data tools, like they have exclusive access to VIDA's global ACR data.
VIDA ACR, break those down for me.
Sure. So VIDA, it's a smart TV operating system, and ACR stands for automatic content recognition.
Okay.
And basically what that means is they have data on what people are actually watching on their smart TVs.
Oh, wow. Okay, so they know like what shows people are watching, what channels they're tuning into.
Yeah, and that's incredibly valuable data for advertisers because it tells them, not just what people are interested in, but what they're actually consuming, what they're paying attention to.
Okay, so Nexon's data platform it's pretty sophisticated stuff.
It is, and it's a big part of why they're so successful.
Okay, we've talked a lot about CTV, and it's clear that it's a major growth driver for them. But, beyond that, they also highlighted some other areas where they're seeing growth, right?
Yeah, their growth in Q4 was actually pretty broad-based.
Okay.
They saw increases across CTV, online video, display advertising, their data products, self-service products, and PMPs, which are private marketplaces.
Okay, and just for our listeners who might not be familiar with PMPs, what are those?
Sure. So a private marketplace is basically a way for publishers to sell their premium ad inventory to a select group of advertisers.
Okay.
So it's kind of like an exclusive club for high-end ad buying.
Okay, so it sounds like they're really firing on all cylinders here.
Yeah, they are. And they also saw some notable increases in spending from some key industry verticals.
Okay, like what?
Well, they mentioned government, retail, finance, automotive, healthcare, and technology as all seeing strong growth.
Wow, so a really diverse mix of industries.
Exactly. Not overly reliant on just one or two sectors.
Okay. And one thing that I noticed in their earnings release was that the U.S. election cycle actually contributed a decent amount to their revenue.
Oh, yeah, that's right.
So how much did political advertising play a role in their Q4 results?
Well, political ads related to the U.S. elections added about $6 million to their contribution ex-TAC in Q4 and $10 million for the full year.
Okay, so not a huge chunk of their overall revenue, but definitely a noticeable bump.
Yeah, and it just goes to show how their platform can be used to reach a wide range of advertisers, including those in the political space.
Yeah, absolutely. So looking ahead to 2025, what are Nexon's main priorities? Like, what are they focused on?
Well, they're really focused on three key areas: growing their relationships with existing clients, attracting new, larger partners, and expanding their revenue from CTV, OmniChannel advertising, and data licensing.
Okay, let's unpack those a little bit. Starting with existing clients, what are they doing to deepen those relationships and get them to spend more?
They're really focused on providing more value to their clients, showing them how they can get the most out of the Nexon platform.
Right.
And they're also working on cross-selling, getting clients who are using one part of their platform to start using other parts.
Okay, so it's all about, making sure their clients are happy and successful, and that'll naturally lead to more revenue.
Exactly. And then in terms of attracting new partners, they're really focused on those big enterprise level clients.
Okay.
The Fortune 500 companies, the big advertising agencies.
What's your else?
Yeah, exactly. And they believe that their end-to-end platform and their data capabilities really set them apart when it comes to competing for those big clients.
Okay, makes sense. And then the last piece was CTV, OmniChannel, and data licensing. Can you talk about those a little bit more?
Sure. So, CTV, as we've discussed, is a huge growth area for them, and they're going to keep investing in that.
Okay.
They're also going to focus on OmniChannel advertising, which basically means reaching consumers across multiple devices and channels.
Okay, so someone sees an ad on their phone, then they see another ad on their laptop, and then they see another ad on their TV, all from the same campaign.
Exactly. And that kind of coordinated, consistent messaging can be really effective.
Okay. And then data licensing.
Yeah, so they have all this amazing data, right? And they're starting to realize that they can actually license that data to other companies.
Okay, so like market research firms, other ad tech companies, that sort of thing.
Yeah, exactly. And that could be a really lucrative revenue stream for them.
Okay, so it's kind of like, they're not just selling ads anymore, they're selling the insights that they get from their data.
Yeah, exactly. And they're in a unique position to do that because of the scale and scope of their data.
Okay, so lot of different growth avenues for them.
Absolutely. They're not putting all their eggs in one basket.
All right, so how are they planning to fund all this growth? What are their capital allocation priorities for 2025?
Well, their main priorities are share repurchases and investing in their platform.
Okay, so they're going to keep buying back stock, which can help boost their share price.
Yeah, and they're also going to keep investing in their technology, their data, their people, all the things that will drive future growth.
Okay. What about acquisitions? Any plans for big M&A deals in the near future?
It doesn't sound like it. They said they're not planning any major M&A in the near term.
Okay, so they're really focused on organic growth.
Yeah, building from within.
Okay. Let's talk about their expenses for a second. As they grow, are they expecting their costs to go up significantly?
Well, they said that they expect their sales and marketing expenses, their general and administrative costs, and their depreciation and amortization expenses to stay roughly the same as a percentage of their contribution ex-TAC in 2025 as they were in 2024.
Okay, so basically those costs will grow, but they'll grow in line with revenue.
Exactly. But they are expecting to see increases in their research and development spending and their stock-based compensation expenses.
Okay. And that makes sense, right?
Yeah.
They're investing in innovation. They're attracting top talent. Those things cost money.
Absolutely. It's the cost of growth.
Okay. Just a couple more things before we wrap up. They also mentioned a potential change in their accounting standards.
Yeah, they said they're considering a move from IFRS to US GAAP.
IFRS GAAP. For our listeners who might not be familiar with accounting jargon, can you explain what those are?
Sure. So IFRS stands for International Financial Reporting Standards, and GAAP stands for Generally Accepted Accounting Principles.
Okay.
And they're basically just two different sets of accounting rules. IFRS is more commonly used internationally, while GAAP is the standard in the U.S.
Okay. So they're thinking about switching to the U.S. standard.
Yeah, it could make things a little easier for U.S. investors to understand their financials.
Okay, makes sense. And they also gave a little bit more detail on their revenue streams.
Yeah, they said that about 90% of their revenue comes from their core programmatic advertising business.
Okay.
And then the other 10% comes from what they call legacy performance activities, which is mainly influencer advertising.
Okay, so influencer marketing, that's where you get, people on social media to promote products.
Exactly. And that used to be a bigger part of their business, but it's become a smaller piece over time as their programmatic business has grown.
Okay. All right. So we've covered a lot of ground here. Big picture, what are your key takeaways from this earnings call? Like what should investors be thinking about?
Well, I think the biggest takeaway is that Nexon is firing on all cylinders right now.
Yeah.
They're growing, they're profitable, they have a strong balance sheet, and they have a clear vision for the future.
Okay.
Their early investment in building an end-to-end platform, especially in the CTV space, is really paying off, and they're well positioned to continue benefiting from the growth of CTV and the shift of ad dollars away from traditional linear TV.
Okay, so they're kind of like the picks and shovels of the streaming gold rush.
You could say that, yeah.
Okay. Anything else that stood out to you?
Well, their Nexon data platform is a real differentiator. That exclusive access to VIZIO's ACR data is a huge asset, and it gives them a real competitive advantage.
Sure.
And then their focus on AI, particularly generative AI, is really interesting. I think they're smart to be investing in that area because it has the potential to revolutionize the ad tech industry.
Okay, and you mentioned their strong financials earlier, but it's worth reiterating that they're really doing a good job of managing their costs and improving their profitability.
Yeah, absolutely. They're not just growing for the sake of growth, they're growing in a sustainable way.
Okay, so overall, you're pretty bullish on Nexon.
I am. Yeah, I think they have a bright future.
Okay, great. Well, that pretty much wraps up our deep dive into Nexon's Q4 2024 earnings call. But before we go, we got to do our this is not financial advice segment.
Yeah. Gotta have some fun.
Right. So based on everything we've talked about today, what's a crazy but maybe plausible trade idea that you're thinking about?
All right. So given Nexon's strong position in CTV and the fact that, everyone's cutting the cord and streaming everything.
Right.
How about this? Long Nexon, short a traditional linear TV broadcasting company that hasn't really moved into the CTV space.
Ooh, okay, I like it. So basically betting on the continued decline of traditional TV and the rise of streaming.
Exactly. The dinosaurs versus the mammals, I guess.
Yeah, okay. So what would be an example of a company on the short side of that trade?
Well, I'm not going to name any names because, this is not financial advice.
Sure.
But, think about the companies that are still heavily reliant on traditional TV advertising revenue and that haven't really made a big push into CTV. Those are the ones that could be in trouble.
Okay, yeah, that makes sense. I have another idea.
Oh, yeah?
Let's hear it. So, Nixon's making a big push into AI, right? And they're trying to make their platform more accessible to smaller advertisers.
Yeah.
So how about this? Long Nexon, short, more established but maybe slower moving DSP that primarily caters to large, sophisticated clients.
Interesting. So basically betting that Nexon's AI-powered platform will be able to disrupt the market and take share from the incumbents?
Exactly. It's kind of like the David versus Goliath story.
I think those smaller advertisers, they need help. They need a platform that's easy to use, and Nexon could be the answer.
Yeah, and the big established players, they might be a little too slow to adapt. They might not be able to keep up with Nexon's innovation.
And their platforms might be too complex for those smaller advertisers.
Exactly. All right, so two interesting trade ideas there, but again, got to emphasize that this is not financial advice.
Absolutely not. Do your own research, talk to your financial advisor, don't just blindly follow our crazy ideas.
Right. We're just having some fun here, speculating a little bit.
Exactly. It's entertainment, not investment advice.
All right, so that wraps up our deep dive into Nexon. We hope you found it insightful, informative, and maybe even a little bit entertaining.
Yeah, we had fun.
And as always, we want to hear from you. What are your thoughts on Nexon? What stood out to you from their earnings call? Do you agree with our crazy trade ideas? Let us know. Join the conversation.
Yeah, hit us up on social media, send us an email. We love hearing from our listeners.
All right, thanks for tuning in to Talk Tickers, and we'll see you next time for another deep dive.
Stay informed, stay ahead.
Bye.